what we've planned today is a focused discussion centered around pharma, and Ravi Dharamshi really tracks the entire pharma space, I won't say with a magnifying glass, but I would say with a microscope. He's got insights on various pharma companies, cycles, trends, and what the global positioning for Indian pharma companies. Ravi, fantastic to have you back. Pharma bull?
Thanks, Nikunj.
Or pharma bull, or that bullish stance has changed? First, let's talk about it.
No, so
still a pharma bull.
Let me give you a perspective. I think pharma got hit by what we call as really, the superstorm. It was flying high, and 3 Fs, basically fewer approvals, fewer buyers, and the regulatory costs going up. So these are the things that impacted, and valuations which had reached like crazy levels. So supernormal profits, we're getting supernormal P multiples. That has corrected. So this US generic pricing has reached a level where the incremental erosion is now on the lesser side. So I feel the business risks are well known, and the valuation risk is out of the contention. But that doesn't mean that things are going to improve dramatically from here. But it's a happy hunting ground if you have a longer term perspective from here.
So amidst all this turmoil, as a pharma investor, have you stayed put, or have you also exited some of the names that you were earlier holding?
No, I continue to hold a few stocks. Luckily, we've sidestepped the major catastrophes in the sector.
Okay.
So, but there has been collateral damage even in our stocks. But I believe the thing is, it's a more nuanced. From going forward, it will be more a stock picking in pharma rather than an entire sector that is going to get re-rated. Because some of the problems are structural in nature. There are only 3 supply chain distributors left, which used to be 7, 8, and they control 90% of the market. Now that is incrementally, they'll remain 3 only, but it's not like the bargaining power is shifting back to the generics in any time in a hurry. Approvals are getting faster. That is also leading to competitive pressure increasing, and the opportunities are getting fewer. So more players addressing fewer opportunities, and then there are these company level problems that arise due to regulatory issues. So that has given the valuations are now way more sane, and what you need to do is figure out which company is where in the regulatory cycle, in the investment cycle, in the is the future more aligned towards non-oral solid dosage generic. Then I think you
so
might
help
find
us
a winner
understand within the Nifty, the bigger boys, Sun Pharma, which was the rising star or rather shining star of the last bull market. You also have Cipla, Lupin, Oro Pharma. Where do these 4 majors actually stand vis-a-vis all the 3 danger points that you just talked about? So
the framework that I would use to judge which company is going to do better in the future is one, it should have lesser exposure to US to begin with. If not, the exposure that they have should have less of supernormal profits and more of and incrementally the pipeline going forward should comprise more of complex generic, specialty, biosimilars, inhalers, dermatology. Those are the kind of opportunities, or that should be the pipeline. If that is the case, then there is an chance that those companies can continue to have a 20% plus CAGR in profits,
right,
which is what we are
finally
looking for.
But when you're saying it's a happy hunting ground,
yeah.
Are you looking at the index names where you have some exposure and you're going to be scaling up on them because they've started recovering from their lows, and theirs was a case of collateral damage? Or are you looking at value in some of the really beleaguered names where there was an issue which is getting resolved?
No, we are looking everywhere. But you need to be able to assess how much of further erosion to their existing base of profits can happen, and how much of the regulatory trouble they are already through. So last few months we have seen a lot of facilities get EIR, which is basically the clearance. But there are still some major ones left, whether it is Srikakulam for Dr. Reddy or Halol for Sun Pharma. Those are still left, and if you believe if the stocks are factoring in the worst case and assigning a low P multiple to that worst case, and I think you can be making an entry at this point of time, and then maybe add to the exposure once the cloud clears up a little bit.
Which would be true in the case of Sun Pharma at least.
Yeah, I mean, I will not recommend any particular stock, but
we're discussing the business model.
Sure,
We're
sure.
not getting into buy or sell.
I'm not
we're
asking
having
you
this,
to
No,
recommend
so-
or put a finger. Yeah.
absolutely. So
Because you said that there are these issues with some of the larger names like Sun Pharma and Dr. Reddy's.
yeah, so the halal problem we have known for like 2 years.
2 years now. Yeah.
Hopefully, it's closer to resolution now than it was in the
But
past.
Ravi, it reflects very poorly on Indian pharma companies that what kind of chalta hai attitude they have. I mean, here we thought 2 years ago that they had the finest R&D labs and the best practices. The red marks which US FDA has pointed out, they just tell you that look, somewhere something has gone wrong in the manufacturing processes.
I agree with what you're saying. At the same time, I will not be so harsh on the pharma industry. If you see some of the observations that some of the MNC companies outside of India in the developed countries have received are pretty much similar. And if you were to just look at the statistics, I mean, the number of warning letters or import alerts into India have increased as compared to our history. But they are pretty much on par with what a company in China is receiving, or even company like Pfizer and even the MNCs are getting it. So I don't think it's an isolated case
tend
of
to get critical
India.
about what we are doing.
Yeah, I think we are a little overcritical.
But that's the pharma bull speaking, right?
No, I mean, see, the power of business still sustains. The
That
real
is what
question,
I want to ask.
the real
Is the
question,
business, is the pricing power, is that getting challenged, or you think that it's a storm? It could be called as a perfect storm, it could be called as a high intensity storm, but it's a storm which will eventually go away, and 3 years from now, these pharma companies are going to give you this massive return. I mean, if you bought TMT stocks or good quality stocks, IT stocks in 2000 meltdown, well, you made money after that.
Right, and I just want to add to Nikunj's question. The starting point of the problem was the US FDA relation. Then it spiraled down to the US having an issue. Now what's happened is that you're seeing that relation improve, the clearances come through, but the problem becoming a little more structural. So you don't know when that headwind clears out.
so I'll actually address your question first. I would be actually happy if there were US FDA problems, because that is one factor which is reducing competitive intensity. So it can be a problem for a particular company, but overall it's reducing competitive intensity. However, coming back to that question whether there is juice left in the space or no. So see, pharma is a $1.1 trillion. This is just US pharma I'm talking about. The problem is that 600 billion out of that was generic. Now that competitive intensity over there has increased dramatically, but the rest of the $400-500 billion market has a lot of opportunities. There are profit pools which can be addressed, whether it is biosimilars, whether it is injectables, specialty, complex. The thing is, now you have to invest for that, and you had to have the foresight to have invested 3, 4, 5 years back, because there's a lead time of 4-5 years before you can launch those products.
When you're investing in pharma stocks, the stocks which you're buying right now, are you buying with the assumption that for FY18, FY19 you may not get an earnings surprise, and you're planning your portfolio for companies which will move in complex generics or specialty chemical, specialty pharma by 2020? Is that your bet now?
I think the consensus has moved to flattish or negative earnings growth over this year and next year. So that gives you a lot of comfort. Also the fact that FIIs used to own about 11.5% of the pharma, and now the holding is down to 5.5%. So they have reduced it by almost 50%. And the sector weightage has come down from 9.2% in Nifty to about
What is your portfolio
5.5%.
weightage in pharma?
I don't look at it that way. We are more stock specific, but we are definitely overweight as compared to the index.
Ravi, most of these stocks are already beginning to lift off from the September lows. Divi's, which seems to be in a different trajectory of its own, is up 16.5%. Dr. Reddy's has recovered over 7%. Sun Pharma is up 6%. Glenmark is again up almost 6%. Lupin, Cipla have already recovered 4% from the September lows. For viewers who are still watching us and who are willing to put in that time to research, what could be a good pharma bet, would the message be that, you've not missed the boat? There is still opportunity to buy into pharma names?
So I'll borrow from Nilesh Gupta's presentation. Lupin, he made a presentation. Basically, the wave 2 is coming to an end and wave 3 is beginning.
Okay.
But there could be a transition period, depending on which company you are talking about, where they'll have to invest for the future and their existing base is eroding. So the erosion in the existing base, I think, should end in the next 4 quarters. But your pipeline starting to contribute could be out FY19 or maybe then onwards.
So there's still time, there will be time-wise consolidation in the sector.
There could be a 1 year more consolidation period before we see the entire sector starting to do well.
Right, but if again, this is not a a call being bullish or bearish, but what would be the 3 business models that you would really like? Because 2 points that I've picked up from your note is, one is that you're liking niche businesses, and you're liking businesses which can capitalize on the revival in Europe. Europe is picking up as well. Yeah. So 3 companies where you think they're poised for that sort of traction.
So lesser dependence on US generic oral solid dosages. That is number 1. Number 2,
oral, not injectable.
Not injectables. Injectables is not such a bad space yet. There's
so
still
get rid of any Indian pharma company which is doing very basic business with US.
Yeah, it's the generic market, and the margins over there were really collapsed, and I don't see the competitive intensity reducing dramatically. It's probably going to stabilize over here.
Second part.
The second part is, obviously you want more exposure to the niche, and the niche could be biosimilars, inhalers, derma, injectables, complex generics, limited competition opportunities. So these, which are the companies that have bulk of their future pipeline aligned to these opportunities, and they don't have so much of exposure to generic solid dosage. That would be a company. And of course the geographic diversification that you spoke about. If you have other geographies also contributing, then you are going to do well.
How many pharma stocks do you own?
Without naming them, I own
Ravi,
3
I was
pharma
also
stocks.
looking for names. Again, if you tell me that Sun Pharma is, its dependence on the US is reducing, which is not the case, that would be a good business to look at. So if you could name the companies as well, the 3 companies that you really fancy their business models, even at this stage.
Buffett even does not say no to Tanvir when she asks a question.
No, I will
because that will not be your call on the stock. That would really be your call on the business.
No, everything is under my radar. Today I might not own a Sun Pharma or Dr. Reddy, but I'm actively looking at when they become a buy. They might already be in the zone. What I understand is I'm not carrying so much of a business risk, and the valuations are more or less out of the window. So when the revival comes through is what really I'm looking.
So I'll have a closing question, and then maybe Tanvir and Aisha could have some follow-up questions. How many large pharma companies will make it to the cut in 2020? Not every Indian pharma company will make it to the cut of moving up the value chain. Not every Indian pharma company will be able to come out of their old bread and butter business and migrate into complex drugs.
The good part about this challenging environment is that Indian pharma companies are not leveraged. Okay. If you look at the global ones, whether it's Taiwan, Mylan, Mallinckrodt, they are all suffering from debt issues along with the competitive market. So Indians are actually in a good position to take advantage. They can buy out Teva's assets or whatever is available for sale. So I don't know who will survive, who will not survive. Everybody will have to make a transition, but they seem to have the whether it is the focus, whether it is the balance sheet, they have it. We will have to migrate and we will have to upgrade. That is the thing.
Okay, now I'll tell you what, Ravi. Rohan's done an excellent job of just capturing the thoughts, and I think this has come from that presentation which you referred to. Top sales of 6 listed pharma companies, they've managed to grow at a CAGR rate of about 17%. Now this is not our data, we've sourced it from a presentation which was done by the management of Lupin. Flip it around, this has been the CAGR growth rate, and we're simply trying to give you the more optimistic side. It's very easy to paint an obituary and talk about whatever has gone wrong. Whatever could go wrong has gone wrong for Indian pharma company. So that's the Indian pharma company growth. Indian pharma company, the returns in the healthcare index, again look at not 1 year, 2 year, you have to look at 5, 10, 15 years. From 2001, the growth rate has been 16 between 2009 and now it has been about 32%. So the annual rate of returns here are very, very, very different. Now Nilesh has done a great job of telling us what has happened in the past. If I have to put a Ravi Dharamshi graph here, that by 2020 or by 2021, what could be the CAGR return from 2 or 3 pharma names? Can they give double-digit returns above 15-17% from these levels?
No, I think you'll have to extend the horizon to 25 maybe.
That's a
because-
long time, Ravi.
Yeah,
Let's be
that's
real.
how the pharma industry works. Only if you have invested in 2013 can you reap the benefits in 2017. So if the investments have started in 2013-14, we will hope to reap the benefits of it beyond 19 and 20. So you will have to have a longer term horizon over here.
Once a bull, always a bull. You're a pharma bull and you will remain a pharma bull.
That's true. Ravi,
Yeah.
it's great to have you in
Thank
our
you.
studios.
Thank you
Thanks
so
very
much.
much. You should
Thanks.
come by more often.